In this video, I will show you a scalping and day trading strategy, which is mainly used in forex, in currency pairs with lower commissions, such as the euro-dollar. In my case, I'm going to do the trades on the 5-minute time frame on the euro-dollar. The first thing we should do is put 3 simple moving averages, MA or SMA. We just look them up and add 3 of these moving averages. We will configure the first one with 200 periods, we will make it red, and we will increase the thickness to the maximum. The second moving average, we will configure it with 20 periods and we will put the color yellow and the thickness in 2. And finally, the third moving average, we will configure it with 5 periods. We will put the color green and the thickness to the minimum. The moving average of 200, we will use it as a filter, that is, if the price is above it, we will only make purchase operations. On the other hand, if the price is below this, we will only make sell operations. We will try to avoid markets where the 200 moving average is flat, as it could be in this case. We will make a buy operation when the moving average of 5 periods, the green one, crosses the 20-period moving average, the yellow one, from the bottom up. We will make a sell trade when the 5-period moving average, the green one, crosses the 20-period moving average, the yellow one, from top to bottom. We will put the stop loss at 10 pips, and the take profit, we will put it when we have gained 5 pips. If you don't know what the pips are, simply select the Trading View Risk-Benefit tool and in the settings, where it says ticks, put 150. Let us now see some examples. Let's start with a buy operation. We first identify the price above the 200 moving average. Then we wait for the green moving average to cross the yellow one from the bottom up. At that time, we will make the purchase. We will put a stop loss at 10 pips and a take profit at 5 pips. All that remains is to wait for the price to touch our stop loss or take profit. Let us now see an example of a sell operation. We first identify the price below the 200 moving average. Then we wait for the green moving average to cross the yellow moving average from top to bottom. At that time, we will perform the operation. We will put a stop loss at 10 pips and a take profit at 5 pips. All that remains is to wait for the price to touch our stop loss or take profit. In this type of strategy, we are risking twice what we intend to win. That is, we risk 10 pips to get 5 pips. That would be a risk-benefit ratio of 0.5:1. But it is compensated because we will have a greater number of successful operations. And ready, I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.